All right, for this video, I wanted to cover some of the main reasons why your tax refund might be lower this year versus the prior tax years. Okay, so tax refunds are driven by a lot of moving pieces. There's a couple of variables to consider. So there's never one particular reason why, and so that's why I'm going to cover high level what's going on here, why your refund might be lower, and then cover some specific examples, some of the most common reasons why we see refunds being lowered versus the prior tax period. So just some of the basics here. When you're looking at your tax return, so if you pull up your 1040, we're looking at page 2. Okay, so page 2 has the taxes that are being calculated. It has all the payments you made during the year, the credits. That's where you're going to really see a lot of these moving pieces as to why your tax refund might have been lower than it was in a prior period. So your tax refund is really a function of a couple big numbers here on page 2. So the first one is look at the total taxes you owe for the year. Okay, this is obvious, right? On 2021's Form 1040, line 24 has that total tax number. Based on your income that's reported on page 1, this is the total tax that you owe calculated on that income. Okay, so that's the starting point. This is what you owe the federal government, okay, based on your wages, your income, investment earnings, etc. Now, the second piece down there is tax withheld from your wages through your employer, right, your W-2, and then maybe other types of withholding on 1099s, right? So if we go down, again, we're still on page 2, your 1040, look at line 25D. That's a total amount of taxes withheld from your W-2 and your 1099s and other forms. Now that's important because taxes withheld, you get credit for those taxes that are coming out of your paycheck, right? So when we calculate total taxes owed on line 24, you would reduce the remaining balance owed by the amounts withheld from your wages, okay? Now the third piece is estimated tax payments. So this is a little less common. You normally only see this with taxpayers that have large amounts of investment income or they're self-employed. Estimated tax payments are actual taxes that you pay during the year, usually on a quarterly basis, where you cut the IRS a check and you mail them a check to prepay some of the taxes. Okay, it's treated very similarly to the taxes withheld from your wages. So if you're an employee, you see that you have federal income tax withholding coming out of your paycheck every week. If you were not an employee, because you were self-employed, you wouldn't have a W-2, so you would have to actually pay the taxes basically manually by yourself. You would have to write the IRS a check on a quarterly basis and pay those taxes. And again, similar to the withholding, you get credit for the amount of estimated tax payments made during the year. And then lastly on the list, so again, we're still looking at page 2 here. On line 32 is an aggregate of the total amount of other payments and federal tax credits that you might be eligible for during the period. So things like the child tax credits, certain types of investment credits. These types of credits, again, they're usually a dollar for dollar offset against your total tax liability. So they help reduce your overall tax burden and ultimately drive what kind of refund you're going to get at the end of the year, or are you going to owe tax? Okay, so now let's look at some of the most common reasons why we see taxpayers have lower refunds. The first one is definitely W-2 federal withholding. So when you look at your paycheck and you get that W-2 at the end of the year, the federal withholding tax is certainly the largest amount of creditable tax you'll have during the period, right? Because most people, their job is their primary source of income, and so they're having a lot of taxes taken out of their paycheck. They get to report those withheld taxes on your 1040, obviously, but the amount that's coming out of your paycheck in the aggregate over the course of the period is going to drive how much of a refund you get. In other words, if you have a job somewhere and you're having them withhold a lot of money, so they're taking a lot of federal withholding tax out of your paycheck every month or week or however often you're paid, you're going to have more money paid in, so you'll likely get more money back at the end of the year, okay? So always kind of think of it that way. The more you have paid in during the period or the higher your credits are, very likely is going to determine how much and how much more you're going to get back at the end of the year when you file your tax return. Now, the estimated tax payments, I see a lot of taxpayers make this mistake. They make estimated tax payments during 1 year and they get a lot of money back. And then in the follow-up year, they don't make any estimated payments. And so they still owe the same amount of tax, but because you didn't have the payments made in during that year, you're not going to get as much back. You might not get anything back. You might owe because you didn't make any estimated tax payments. Okay. Now, the third one is, let's talk about the tax credits, right? So credits are big. The earned income tax credit is basically directed towards lower income taxpayers and taxpayers that have children. So if you have dependent children that are qualifying children for purposes of these rules, you will get an earned income tax credit. And again, that's a dollar for dollar offset against your liability. You might get a tax refund because of that component. Now, the EITC does have limitations. It does have phase out. So a lot of taxpayers that I see will get an earned income tax credit in, let's say, 2020. And then when they do their 2021 tax return, because they made so much more money, they have now entered that phase out region where they're not going to be eligible to claim the EITC anymore. So if you make too much money, you're being phased out of the credit. If your children are no longer qualifying children, right? So if they reach an age where they can't be your dependent anymore, now you're also going to have a limitation there because you have no qualifying children anymore. Very important to pay attention to, what was creating your tax refund in a prior year and how did it change this year. The EITC is a big one. And then lastly, the child tax credits. This is very similar to the EITC issue. Child tax credits are a nice, big, refundable tax credit. For 2021, it was either $3,000 or $3,600, depending on the age of your child. And the child tax credits, like the EITC, are subject to phase outs, right? So if you make too much money, or if you hit an income level to one certain extent where you lose it altogether, you're not going to get these tax credits anymore, or you're going to get a reduced amount. So again, a lot of taxpayers have children that either let's say they turn 18 and they're no longer eligible for the child tax credit, or the parents still have the dependent children, but now they've got a raise at their job, or they got a new job altogether and they got a significant increase in pay. Their increase in income might push them into that phase out range where they can no longer qualify for the child tax credit altogether, or they still qualify but for a reduced amount. So that covers it for this video. I hope that was helpful. Again, you really have to pay attention to your return, page 2. Look at that carefully. Look at the prior years, because there is really no one reason for most taxpayers why they got a lower refund. Okay, there's a lot of moving pieces here. There's a lot of things that change within your tax profile from year to year, and that could be the reason, one, if not many reasons, why your refunds are lower or eliminated completely. A lot of taxpayers end up having to owe and pay the IRS money when they're typically getting a refund, so they never have to budget for having to write the IRS a check at the end of the year. All right, so that covers it for this video. I hope that was helpful. If you have any questions, obviously, please leave me a comment below. I try to reply to as many comments as I can when I get around to them. So very much appreciate you watching. Leave a comment below, like, subscribe to the channel if you aren't already, and I look forward to seeing you again on the next video. Thank you.